Hello, hello, hello. Good morning, everyone. How is everyone doing today? Hello, Sashi. Hello, Jacob. Hello, Wavy. Hello, Options 22. Hello, William S. Hope everyone. Hello, George. So, we have the inflation numbers out. Prices, and as you said, prices were 8.5 higher in March than a year earlier. Crazy rip your face off rally. And we were at cycle bottoms. It just took a couple extra days, but it's the celebration because look, core inflation only at zero point 0.3 versus zero point 0.5, uh, and 6.5 versus 6.6 mainly because of a drop in used car prices. So, uh, yeah, that's the celebration. But this is why you trade technicals because it was already set up for that. Inflation rate year over year 8.5 versus 8.4, but that's not the number it's rallying off of. And it just was already poised to rally. Don't try to make sense of it. That's why we follow the technicals. Again, you're still looking at it. I saw some stuff people say, no 50 basis point hike in May. Yeah, still 50 basis point hike in May. Like even core inflation at 6.3 annualized, or I mean 6.5 annualized. That's terrible. By the way, NFIB optimism index coming in worse than expected earlier this morning. So, and remember also we do have more Fed speak today, and it looks like Bob will be joining the stream. Let me just go over the Fed watch is about closing in on 90% before he jumps on. The gamma line we're moving up, but remember negative gamma it can amplify the rip your face off rallies. So please keep that in mind. Now where are my charts? There they are. Whoa, there we go, there we go, there we go. So S&P, you see nice little bounce. Now this is where we really get interesting with this push lower. I did more analysis last night after the stream. It's we could easily rally up to this higher area, but the odds are a lot lower now that we will push above the high from the 29th of March. Let's see. Who else do we have? Well, I think we'll rally back we should rally for at least a few days. And then I'm watching for the big sell-off. Morning, Ken. Morning, Mike. We'll start watching once we get some of this oversold condition burned off. And remember, we have just some aggressive setup buys. The macros fixed, time to rip. Yeah, exactly. Tesla up 25.6. You watch for that gap fill. It's time to put the party hats on. Completely agree. No, this is we're going to get the next rally up. This is the one I've been watching for. This is going to be very telling. If you want to just watch one thing, by the way, we came back down right in front of that 50% level, right in front of that 50% level on the S&P with this little mini double earlier in the European session that triggered and paused right before the big number. Just wanted to point that out. If you want to play along at home on this rally, let's see, I'm just keep glancing over to see if Bob's going to jump on. If you want to play at home, yeah, for this rally, then your key area is between the 50 and the 62.5 to watch. If it gets above the 62.5, then I'll be focusing this 4600 to 4631 area for a topping pattern. Let me see here. Let me see if if it still works. Oh, hold on. Before I bring Bob on, if you are new here, please do consider subscribing, ringing that bell, and hitting that like button. Longer term viewers, please come back leave comments like you've been doing and like the videos. With that, Bob, Big Bob.
What's that?
Big Bob, look at those fancy buttons. Bob's button works.
I like it.
Yeah,
That was quick.
it was. So I think you'll probably want to talk about the numbers.
Yeah, I just want to say that there's actually some really good news in these inflation numbers. I think sometimes you might look at Mike and I as perma bulls, right? Oh, I know, Wavy. We can talk about that too. But sometimes we might perma bears, I should say. But there's actually pretty good news in these inflation figures for the Fed. Now, This 8.5% headline inflation year over year is horrible, obviously. It's the highest since 1982. For those of you that don't know, that was when Paul Volcker was trying to control inflation, and he temporarily did. And then he lost control of it again. Eventually, he tamped it down with just some really violent money supply movement. But the core inflation missing and only being up 0.1% from previous means that if oil prices continue to go down and gasoline prices follow, next month you could see the headline follow that down. Well, it actually might be the month after because we're in April, and by the time these feed down, they may be 2 months away. The other thing is there was a big drop in used car prices that's responsible for most of the fall that we saw in the core inflation rate month over month. The core inflation rate not only missed expectations, but fell from last month, the month over month rate. The headline came in as expected. It was much higher than the previous by 0.4%. But the little bit of good news in here, which is probably why we're rallying just a little bit in equities and yields have come off just a little bit after this number, is in that month over month and year over year core inflation rate because crude oil prices have been dropping. Now, if I'm being 100% honest, I haven't looked at crude this morning yet. I know it fell yesterday pretty substantially. I don't think it closed below that 95, it was 95.53 area yesterday, Mike. I don't think it did on a daily.
It did not. It closed on the daily. I'm just focused on this. On the daily, it closed just below that. Just below. It closed at new recent lows from the last swing lows, but not. Yeah, new. It made new lows and closed at new lows.
Okay.
The only thing I'm keeping an eye on right now, we have a confirmed double bottom right here that is. I'm watching for that trigger.
Is that on the 4 hour?
Yeah, you could. It's tradable on the 4 hour, but that's it, and it would just be a short term pop. We have this longer term trend line. I'm really focused on the first and second targets up in here to see if we get a little relief rally. It's again, there's a lot of buyers stepping in. This is a pretty solid floor, right around 94.
Yeah, and this is one of the beautiful things about multi-time frame analysis is if you like the longer term trade to the downside, which I do. Seeing this 4 hour double would make me wait to get into that longer term sell because it would tell me that I could potentially get a better price on the longer term sell. But also, unless the longer term sell was invalidated in the process of this, right? So from a crude oil perspective, so the daily itself, was it the daily or the weekly? You know what? I should just look at my own charts or not talk about it till this afternoon. But yeah, so that's where I'm at with the crude oil thing. But again, I just wanted to talk about, and I'll leave the rest to Mike unless there's a question of any sort. I can address the crypto thing if you want, but
well, hold on. We got a Ted Chambers is bringing a peace offering Ferrari to the moon.
We're agreed, Ted. We're no longer in a fight, buddy. we are done with our fight. It lasted a whole weekend.
So let's see. I'm just. What did you want to talk about the crypto thing real quick? Then I'll get everybody prepped for the morning.
Yeah, the crypto thing was funny. So when Elon Musk bought the 9.2% of Twitter shares, I was called up. I think I talked to you guys about this in an afternoon, but for those of you that aren't on the afternoon sessions, I got called up by CoinDesk, which is a publication, asking me for a comment on it. And they said Doge seems to be rallying on it. CoinDesk is a crypto publication. And I said, the Twitter rally, I understand. I said, I think the Doge rally is a little bit silly because Elon's been offered a board seat. This was after he was offered a board seat and told that if he took that board seat, he had to agree to cap his ownership of Twitter. I think it was 14.6%. It was somewhere below 15% of ownership of Twitter. So he couldn't buy any more, basically. He could buy another 5% approximately. And he initially verbally agreed to take it. And I said, if he's on Twitter's board, he can't pump Doge via Twitter. As a matter of fact, he can't pump anything via Twitter because not only is he running afoul of SEC regulations, pumping Tesla and SpaceX and everything else that he's involved in, which he's already gotten slapped on the wrist for. Mike and I both agree he should have gotten much more than that. But Once he's doing it through Twitter, it's now two boards that he's in violation of if he's doing one of his stocks. And if he uses Twitter to pump Doge because he owns Doge, we don't even have any evidence that he owns Doge. But if he were to do that, he'd run afoul of even more, which now when he goes on Twitter and pumps Doge, he's not really violating anything. He's just being like any of these other Doge to the moon people, right? That's what I said to the reporter. And the reporter basically said that he's under more scrutiny. And this was a quote by me. He's under more scrutiny as a board member of Twitter and can't use it to pump Doge or really bring Doge on. And the Twitter guys made a bunch of memes about me. And I thought they were hilarious. I mean, you're not gonna upset me by making fun of me on Twitter. I don't give a shit about that. I really don't. So I said, guys, these are hilarious. I love it. Keep doing it. Make more. Somebody do a meme of Will Smith smacking me, please. And I asked for all these things. And they definitely obliged. One of the guys said, we love you, Bob, but be careful what you ask for. And then I went and I bought a tiny, tiny amount of Dogecoin. And right afterwards, I tweeted, by the way, I own Dogecoin, but not because of Elon. Right? Now, I've already sold it, by the way. I haven't told Twitter this yet. But it's just an example of how with Doge, you don't have to, there's no disclosure rules with crypto, right? They're not regulated yet. So I've already sold those Doge. And now these guys are like, Bob's part of the Doge family. I'm like, not really, but whatever. Keep making memes. I think they're hysterical.
Well, there you go. So
I'm a dog fanatic like Mike is, and you could make a meme of me kicking a puppy and I wouldn't care. It's like it's Twitter. It's not real.
Twitter's
So
everything, Bob.
I know it's ridiculous.
Well,
It's just so silly.
let me get back to cover the markets since,
Yeah,
and then you'll be on this afternoon.
I'll be on this afternoon. I'll talk to you guys then.
All
See
right.
you guys.
All right, bye. All right, real quick, small mic again. There, we just had Bob pop in. I see real quick options 22. Let me jump around in here. We'll try to get as much done as possible. Again, nothing's changed since the thing yesterday afternoon. The key area I'm watching this morning, we're going to gap up in here. 62.5 level from this gap fill. Then the target is the gap fill. So 349, 350 area. That's what I'm paying attention to this morning. Even if we gap up and retrace a little, it's fine. I mean, it's just watching for that pullback and then the rotation back up. But that's the very short-term target off of there. And then longer term, again, I'm expecting this to have this rally to have a little legs, but not that much. I'd focus on about 355 as the next target area. That'd be the 50% level from this decline. And then 62.5. What generally my strategy would be: gap fill today, take something off, 50% move up, stop, 62.5% either move up, stop, take something off, and I'll close above 62.5% on at least a 1 hour, 4 hour basis and target the higher levels. That's how I'd look to play it. And any point in there on a little pullback, it could be re-adding to that core position. But I would not get more bullish, especially above the 50% level, unless we can show some real strength and close above 62.5. And that's pretty much the way. I mean, we're going to get a little pullback in the open, so then I'm watch for that rotation up. But that's essentially the way I'm looking at all these indices. So let me take off these levels. By the way, you see how we again bounce right in front of that 50. I'm just going to pull this off. So for the S&P, virtually the same thing. We, again, don't have the gap. Little reaction right here to prior resistance becoming support, but we break through there. Next cluster area I'm watching is 44.75. And this just isn't for today. You know, we can pull back. You can do your little retracement pullbacks here. And then above there, you see this little candle resistance shelf, 45.06, 50% level. So those are my first two major targets. Above there, then I'm watching the 62.5, 45.37. A close above there, then I'll be targeting 4,600. Why 4,600? It's the 87.5% harmonic, and that's statistically the next major target on here. Now, keep in mind, anything that gets up in this area, we could have another possible potential double top with conservative targets. So that's when I'll get really interested in another major topping pattern for a retest of these low areas. Okay, even with a pullback on the open, that doesn't bother me. You see, we're rallying to the other side of the 4-hour rotation zone. Cycle's turning up, not yet overbought. So we had this little double earlier. Again, on the NASDAQ, this little double that paused, and then you actually came back to retrace to that target level. That was stuff that I was watching for overnight. Same thing. Let me pull off some of these levels again just to show you the not to overclutter the charts. See here the key levels, just reaction at this 25% in the 4-hour rotation zone, but back above there. Next target I'd be using for the futures 14,413. Then major would be 14,577. And then look at this with the breakdown area that triggered this double top. That's now the 62.5% harmonic, 14,756. So this in the NASDAQ is where I'm really focused on for a continued rally this week. Okay, if we are breaking down in both, if this rally does not hold, that will be pretty bearish if we go to new lows, but then it'd be 13,732 on the NASDAQ. And for the S&P, now that we got the longer pausing action with this little relief rally, it is 43.51. The Dow, let me clear off a couple of these things here. Right at this harmonic 34,000 and the sloping up 200, that was the reverse harmonic. If the Dow can't hold up here, oops, the next level would be, again, significant level with harmonic 33,855. Key areas on the Dow would be around 34,650, and then next level is 34,800. Let's check in on the DAX real quick. Back in this overall congestion pattern, nothing really to do. By the way, Germany inflation numbers were absolutely horrid. Absolutely horrid. So I will be watching for another rollover in the DAX. We already went through crude with this little potential double bottom play. Going to watch for a slight pause and then a continued area there. Gold moving up, hitting this harmonic from yesterday. Next target for me is 1992. And then major will be 2011. Silver, moving up a little weaker than gold. I'm just going to key off of a 25.96 area. Notes, remember watching for the bottom in here. We came back down last night. We had this major cluster area right here and the little double. I'm going to just take these levels off for now so you can see this little double. By the way, this other double was invalidated, but then we rallied off this little double straight through there. So what am I watching for? Notes now will be this most recent push down. Most recent push down. So my next intermediate target is 120.24. My major target is 121.07. When I start getting even more bullish, though, is when we get above 121.23. Okay, because I am watching for a longer term bottom in notes. Now, if it breaks down again, that will be incredibly bearish for notes. Like I'm not talking longer term, I'm talking shorter term. And then that's 118.28. Let's take a look. Tesla again. Watch for where it's trading now. We talked about this yesterday. You still have the gap fill. All right, the gap fill. The gap fill level is roughly 1,006. So they're getting at least a short-term close above there. Target, it'd be a target for the gap fill and then a relief rally slightly beyond that. Again, I would not be surprised if the NASDAQ bounces for a couple days to watch for a relief rally. Keep in mind that you do have a fair amount of overhead resistance and you do have overhead bearish news still on Tesla. So if you're trying to play for something bigger, this is definitely an area to move up your stops. Let's see where we are. Uh, do I think the rally will sustain for a couple days? Based off the cycles, yes, we should sustain for a couple days. And that's where I'm really paying very close attention, because if it can't even sustain for a couple days, the market is very, very weak. The 5 million collar is printing now. Hey, genomic stock, another relief rally. Good to hear. Yep, another relief rally. And this is the one. This is the one that's going to be very telling. Right on time, Putin says Ukraine has deviated from the agreements achieved at last talks in Istanbul. Thank you for that information. Again, I can't watch the headlines right now. Yes, we are bullish today, even with this pullback. I'm watching for continued to bullish price action. Why is market up? The CPI core came in slightly lower than expected, so and we were already technically watching for this bounce. It was oversold. There'll always be a reason attributed stuff. By the way, if you're watching for this bounce, if you want to know in the bigger pullback, again, here's the real simple way, beyond doing a ton of analysis. So if we come back down and start getting a closing prints below about 44.12, that is not good. If you just want to go to rule of thumb, always on these little rallies, put up and watch even if we pulled back to the 50, it's still bullish. It would just be a pullback trade. I'm not expecting it to get back that far. But if you start getting the close below 62.5, then it's retesting the low area probability wise. Is it guaranteed? No, but it's got very high probabilities it would retest this area. So that's your little thing you could always go off of. We already did Tesla, CRM. Again, you're going to get some gaps in a lot of this stuff against the 1 hour rotation zone. But CRM, again, I'm watching stuff for any pops. They're short-term plays like we talked about it yesterday. If you're watching CRM, a rally, little rally, you have that gap fill pretty much done already. But that would just be a little relief rally. I'd be focusing on the daily rotation zone, and then about 204. If it's a multi-day rally, you could get the close, and I watch for the gap fill, but there's still plenty of overhead resistance right there. NVIDIA, I talked yesterday, I was watching for the little play. I'm still going to be targeting the gap fill for this morning, especially with this gap up. Even with a slight retrace, going to be watching for that gap fill play in NVIDIA. And I already talked about yesterday, there is that it's going to trigger 4 hour aggressive buys. So I'm watching for the little play up there. Christoph, yes, German inflation is terrible. Thanks for touching on the DAX. Again, just a quick peek back with Chris. I would not be surprised to see a little bounce in the DAX and then the longer term rollover. Again, this would just be a bounce play coming out of the cycle bottoms. So there's nothing long-term bullish besides a little short-term bounce play. Dollar index, we'll take a glance in at that. VIX should be pulling back. Yep. Again, never got that close above the 25% level, or the 25 level, which would have made me even more bearish. I'm watching to see how it reacts to 21 now. Dollar index. You got this little mini double top. So if that does trigger, you can see it here. It's better on the 4 hour. If this does trigger, then it would just be a little quick down move in the context of this bigger up push up. So that would be, it could go back to just the 99 area. With that, well, you mentioned last week that you were expecting some of this junk that's been short squeezed this week. Here comes the squeezes. Yep, exactly. And that's what I'll be watching for. And those, again, are short-term plays. Like ARC junk. Those are short-term bounce plays, especially if the NASDAQ continues with momentum through today. There could be some interesting short squeeze plays again. You got to be nimble. Nothing I'd hold on to long term, and I tighten up stops very, very rapidly. there'll be plenty of opportunities. If you're in Discord, I'm sure a bunch of people will be posting them. And if you're new here, please do subscribe, hit that like button, and ring that bell. Come back and leave some comments. And I'll be here with Bob this afternoon at 3:30 Central for the end of day wrap up. Bye for now. Coin, hold on, coin. Your whole thing is this gap play. That's the only thing I'd be focusing on with coin. Coinbase, just do your harmonics for the gap play. Just even do them off the daily. And then you're above 157.50 area, play for the gap play. If it continues beyond there, I'd focus on about 164. And I would not ignore your 4-hour rotation zone. There we go. I will wrap it up for now. Talk to everybody later.